Next topic, types of economic system. It is a system in which government allocates available resources across the country. वर्ल्ड में जितनी भी कंट्रीज है, हर एक कंट्री में एक स्पेसिफिक इकोनॉमिक सिस्टम होता है. तो इट कैन बी कैपिटलिस्ट इकोनॉमी, सोशलिस्ट इकोनॉमी और मिक्स्ड इकोनॉमी. इसके अलावा भी बहुत सारे इकोनॉमिक सिस्टम अवेलेबल है, बट कॉमर्स के सिलेबस में ये कवर नहीं होगा. तो टाइप्स ऑफ इकोनॉमिक सिस्टम में कैपिटलिस्ट इकोनॉमी, सोशलिस्ट इकोनॉमी एंड मिक्स्ड इकोनॉमी सिर्फ स्टडी करना है. लेट्स स्टार्ट विथ कैपिटलिस्ट इकोनॉमी. इट इज ऑल्सो कॉल्ड एज मार्केट इकोनॉमी. It is a type of economic system in which the resources are owned, managed and controlled by private sector organization, private individuals. And the main objective is profit maximization. कैपिटलिस्ट इकोनॉमी में जितने भी रिसोर्सेस है वो प्राइवेट इंडिविजुअल्स ऑर्गेनाइज करते हैं, गवर्नमेंट इंटरफियर नहीं करती, और मेन ऑब्जेक्टिव इज प्रॉफिट मैक्सिमाइजेशन. हियर price determination is done through market force. Market force means demand supply force. जहां पर डिमांड एंड सप्लाई का मिलता है वो प्राइस डिटर्मिनेशन होता है, वो प्राइस डिटरमाइन होगा. एंड दिस टाइप ऑफ इकोनॉमिक्स कैन बी फाउंड इन जापान, जर्मनी, मेक्सिको, Singapore, etc. And very important for exam point of view, the father of capitalist economy is Adam Smith. Let's start with the features of capitalist economy. First point, right to private property. Here the factor of production or means of productions such as land, labor, material, etc. are owned, managed and controlled by the private individuals. So there is a right to private property. Next, freedom of enterprise. कोई भी बिजनेस ऑर्गेनाइजेशन अपनी मर्जी से बिजनेस स्टार्ट कर सकता है, एनी टाइप ऑफ बिजनेस, वेदर इट बी अ मैन्युफैक्चरिंग बिजनेस और ट्रेडिंग बिजनेस और इवन एड एजेंसी कैन बी स्टार्टेड. Next, freedom of economic choice with employees and customers. Employees have freedom to selection of work and customers have freedom to choose the product. All the decisions are guided by self-interest and there is no government interference. Next, profit motive. The primary objective of any business organization will be profit maximization. Consumer sovereignty. It means customer is the king of the market. Customer will decide what to produce and in what quantity, and business will produce those products which are demanded by customers. Next, competition. There will be availability of competition in the market. Any person can enter into market because there is a freedom of enterprise. Very important feature of capitalist economy is competition. Competition brings out the best quality goods and efficient utilization of available resources. Next, absence of government interference. The capitalist economy is not regulated by government and there is no central planning authority. So these are the features of capitalist economy. Remember, capitalist economy is also called as market economy or free market economy because government interference is absent. Next, advantages of capitalist economy. First point, price mechanism. The price is determined by demand supply force. Customers से over price charge नहीं कर सकते because there are many suppliers and high level of competition. Healthy competition. Because of availability of competition, the business will provide high quality goods at reasonable price. Next, freedom of enterprise and economic choice. बिजनेसमैन के पास फ्रीडम ऑफ एंटरप्राइज है, कोई भी बिजनेस स्टार्ट कर सकता है, और एम्प्लॉइज के पास फ्रीडम ऑफ चॉइस ऑफ वर्क है और कस्टमर्स के पास फ्रीडम है राइट टू चूज. Employees can select any work they want, and customer can choose any product they want. Next, faster economic growth and technological progress. All the investors will try to invest only in profitable projects. Next, optimum utilization of resources. It increases the quality of goods and reduces wastages. Encourage to take risk. The best quality of entrepreneur is they take risk. And as there is freedom of enterprise, young generation will come up with new startups. Next, demerits of capitalist economy or limitations of capitalist economy. First point, absence of social welfare. As the primary objective is profit maximization, the businessman will try to produce luxury goods to earn high profit. Next, economic inequality. Because business will try to focus only on those customers having buying capacity. Next, income inequality. The means of productions or factor of productions are distributed among entrepreneurs. So it will result in economic instability, unemployment, and economic depression. Next, unplanned production. As there is absence of centrally planned authority, the producer will try to produce at maximum level. And if the production remains unsold, then there will be wastage. Next, formation of monopoly. In the competitive environment, only large players can survive and small players will not survive. So there will be formation of monopoly. Next topic, how do capitalist economy solve their central economic problems? What will be the problem? Scarcity of resources. Resources such as land, labor, material, money, etc. are limited in nature. So, how do capitalist economies solve their problem? So, in any economy, four major questions are asked: what to produce, how to produce, for whom to produce, and what provisions are to be made for future purpose. So, let's start with very first question: what to produce? So, whether to produce capital goods or consumer goods. Capital goods are those goods which are used to manufacture consumer goods, and consumer goods are those goods which are consumed by the final consumers. So capital goods such as plant and machinery, equipment, etc. Consumer goods are stationery product, mobile phones, clothes, etc. So what to produce and in what quantity depends upon the demand of the consumers. Next, deciding how to produce, whether to produce by capital intensive method or by using labor intensive product. It depends upon the country to country. So developed countries produce goods by capital intensive method, and developing countries or underdeveloped countries produce goods by labor intensive methods. For example, clothes can be manufactured by power loom and hand loom. So if there is overpopulation in the country, preferable method will be using labor intensive method. So how to produce, whether to produce by capital intensive method or to produce by labor intensive method. Next, for whom to produce. It depends on those customers who are having buying capacity. And last, deciding about consumption, saving and investment. Here, savings are done by the consumers and investment is done by the producers to get higher return on investment. So these are the questions which are asked to know how any economy can solve their central economic problems. So to conclude, all the resources in the world is limited. Nothing is unlimited. Even the richest man in the world is having limited money. Even the richest country in the world is having limited resources. So every economy, whether it be a capitalist, socialist or mixed economy, has to face central economic problems. Socialist economy. It is also called as command economy, centrally planned economy, or communist economy. Under socialist economy, the factors of productions and resources are owned, managed, and controlled by government. The main objective of socialist economy is social welfare, and price determination is done through central planning authority. Earlier, Soviet Russia was a country as a socialist economy. Now, North Korea is an example of socialist economy. But no country in the world can be pure socialist. The word socialism was propounded by Karl Marx. That's why he is known as the father of socialism. Next, features of socialist economy. First point, ownership. The factors of productions and resources are owned by the government. Next, maximum welfare. As there is absence of private ownership, the government will try to maximize the social welfare. Absence of price mechanism. The price is determined by Central Planning Authority, which is a department of government. So there will be no market force or demand supply force. Price is not determined by market force. Next, absence of competition. As there is no private entrepreneur, so there will be no competition to the government. Only government single-handedly operates the business organization. Economic planning. The economic planning is done by Central Planning Authority of every country. Unlike capitalist economy, there is economic and income equality. All the resources are distributed among people equally. Next, absence of consumer choice and choice of occupation. The employee cannot freely choose any job, as these are decided by the government. Merits of socialist economy: social welfare, no labor and consumer exploitation because it is done under capitalist economy by private sector organizations. Proper utilization of resources because there is no competition, so government will produce that quantity of goods which are demanded by customers, and they will not produce and store extra stocks. No cyclical fluctuations. Demerits of socialist economy or limitations of socialist economy: no choice of occupation and consumer sovereignty because consumers has to purchase what are available in the market. No scientific price mechanism. There is no demand supply force. It is the price is determined by Central Planning Authority. Remember, very important for exam point of view. Evils of bureaucracy. It means there is a presence of corruptions and red tapeism. No incentive to hard work because the promotion and appraisal is not done according to performance, but it is done on seniority basis. Next, how do capitalist economies solve their central economic problems? What to produce and in what quantity, that is decided by government. So whatever government produces, the consumers has to purchase that product only. How to produce? The government will decide whether to produce by capital intensive method or by labor intensive method. For whom to produce? Generally it is produced for all the citizens of the country, and what provisions are to be made for future will be decided by Central Planning Authority only. Let's continue with comparison of capitalist economy and socialist economy. Capitalist economy is also called as free market economy or market economy or laissez-faire economy. Laissez-faire means free market economy. Socialist economy is also called as communist economy, centrally planned economy or only planned economy, and command economy. Under capitalist economy, the resources or factors of productions are owned, managed and controlled by private sector individuals, and under socialist economy, these are managed by government. Price determination is done through market force under capitalist economy. Market force means demand supply force, and under socialist economy it is done by central planning authority. Primary objective of capitalist economy is profit maximization, and under socialist economy it is wealth maximization. There is no government interference in capitalist economy, and there is a presence of government in socialist economy. Role of private sector: there is presence of private sector organization, and there is absence of competition or private sector organization. Competition: there is high level of competition, and there is no competition. There is a monopoly of government. Income distribution: under capitalist economy there is income and economic inequality, and under socialist economy there is income and economic equality. So we have discussed capitalist economy and socialist economy. Let's start with mixed economy. Mixed economy is a system where advantages of both the system, capitalist economy and socialist economy, are covered, and disadvantages of both the economy are removed. Under mixed economy, there is a presence of both private sector organization and state ownership. It means there is an ownership of private property which focuses on profit maximization, but state imposes necessary measures to regulate and control private sector so that society can take benefit of social welfare also. For example, India. Let's continue with features of mixed economy. First point, co-ownership of private and public sector. Next, price mechanism. Price is determined by private sector organization, but state imposes some limit so that price will not go beyond the control. Next, competition. There is a presence of private sector organization, so there is a competition to some extent. Next, consumer sovereignty and freedom of choice. As the feature of mixed economy consists of both the merits of both the economy, so it consists of freedom of choice and freedom of enterprise. There is economic and income equality because there is a freedom from exploitation due to state participation. So, as we have seen that the mixed economy has merit of both economy, it is not possible to adapt this economy by some countries such as developed countries. It also has some limitations such as poor planning and implementation, wastage of resources, corruption, delay in economic decision, underperformance by public sector undertaking, due to which the loss-making units has to be sold off. So, to conclude, there are three types of economic system in the world: capitalist economy, socialist economy, and mixed economy. So, concepts and elements of business environment done. Economic environment under which economic system is done. Let's start with economic policies. Next, types of economic policies. Economic policies are the tools to accomplish some economic goals like price stability, full employment, economic growth, etc. As an Indian, we wish to have some price stability of goods and services in the system. That is, low level of inflation in all the areas of economy like technological product such as laptop, mobile phone, etc. Consumer goods like vegetables, fruits, durables like TV, refrigerator, furniture, retail goods, etc. But to earn profit, businessmen try to sell at higher market price. Even the value of house property, car, precious metals keeps on increasing. To control such inflation, government takes some measures and fight against inflation. So these economic policies are monetary policies, fiscal policies, industrial policies, and trade policies. These are the policies through which the economic goals can be achieved. So in our syllabus, only monetary policies and fiscal policies are specifically there in commerce syllabus. So we will focus only on these two policies. Under monetary policy, we will discuss meaning, objectives, monetary policy framework, instruments, the organizational structure of monetary policy decisions. So let's start with the meaning of monetary policy. Monetary policy is a tool used by central bank in line with central government to regulate money supply in the economy. And in case of India, the central bank is Reserve Bank of India. The main objective of monetary policy is to control inflation and price stability. Both are one and the same. So the main objective, primary objective of monetary policy is to control inflation into the market by using monetary policy instruments. When price increases, the central bank takes corrective measures. Monetary policy is intended to influence various macroeconomic factors such as economic growth, employment generation, exchange rate stability, interest rate stability, balance of payment equilibrium, general price level, aggregate demand, etc. Monetary policy framework. The central bank functions within the framework of monetary policy. It consists of objectives of monetary policy, analytics of monetary policy, which focuses on monetary policy transmission mechanism, and operating procedure, which focuses on operating targets and monetary policy instruments. So objective of monetary policy we have already discussed. The primary objective is price stability, then economic growth, employment generation, exchange rate stability, balance of payment equilibrium. These are the secondary objectives. Next, analytics of monetary policy. It consists of four mechanisms through which monetary policy influences general price level, national income, economic growth, interest rate, exchange rate, quantum, etc. So the primary objective of monetary policy is to control inflation. What is inflation? Increase in price of any products and services over a period of time. So to control such inflation, central bank takes corrective measures by four ways. So first one is interest rate channel. Let's discuss first analytics in detail. So central bank increases or decreases the interest rate depending upon economic situation in the market. For example, during the period of recession, central bank introduces expansionary policy. It means when there is recession period in the market, means when there is economic slowdown, then the central bank reduces the interest rate. If interest rate is lower, then people will borrow more and there will be more lending. If producer will borrow more, there will be more production, and if there is more production, GDP will be increased and ultimately there will be economic growth. So expansionary policy will be introduced at the time of recession when there is economic slowdown, and contractionary policy is introduced when there is boom in the market. It means during the period of inflation, at the time of inflation, the central bank increases the interest rate. If interest rate increases, the borrowings will be reduced. Borrowings and lendings will be reduced. If borrowing reduces, demand will be reduced, and if there is less demand, the producer has to sell goods and services at lower rate. So ultimately price will be reduced. So inflation will be reduced and there will be price stability. Let's revise. During recession period, expansionary policy is introduced, it means when there is a economic slowdown in the country and price is lower, then interest rate will be reduced. If interest on loan are reduced, then people will tend to take more loans. So lending and borrowing will be increased. More money is available, so more production will be done. More production means more GDP and more economic growth. On the contrary, during the time of inflation, when there is already price hike in the market, everything is selling at high price. That time, the central bank will increase the interest rate. If interest rate increases, the producers will take lesser loan. Less loan or less borrowing will cut down the demand, and ultimately producer has to sell goods at lower price. Next, exchange rate channel. If repo rate in India is higher than USA, then capital flies into India because people will tend to invest more money in India. Hence, there will be capital appreciation in domestic currency and the exchange rate changes price. Therefore, there will be change in export-import price of goods and services. Hence, the export becomes costlier and import becomes cheaper. Next is quantum channel. It is similar to interest rate channel. It means the availability of credit in the market. If there is availability of credit in the market, people will tend to borrow money. There will be more production. More production brings more employment generation. More employment generation increases the national income. If there is high national income, means there is more per capita income, which increases the demand and ultimately increases the price. On the contrary, if there is non-availability of credit in the market, then producers will produce less, there will be less employment generation, less demand, and if there is less demand, then producer will be trying to sell at lower price. Hence, the inflation in the market reduces. Next, the standard asset price channel. Standard asset price channel consists of the price of real estate, equity shares, etc. So how does it work? If interest rate on government bond increases, people will tend to increase investment in bonds and reduce investment in shares and real estates, etc. So money supply will be reduced because people have invested into government bond and disinvested from equity shares and real estate. So this is how inflation is controlled. Let's start with next topic, operating procedure and instruments. It consists of three things. Choosing operating targets. Operating targets means short-term targets. For example, inflation control. Next, choosing intermediate target means long-term targets such as economic growth, employment generation, and monetary policy instruments. So what are the monetary policy instruments? So let's discuss each instrument in detail. There is a RBI at the highest level. It is also called as the banker's bank or lender of last resort. Then comes scheduled commercial bank such as SBI, Bank of India, ICICI Bank, HDFC Bank, etc. Then general public. SBI lends money to the general public. These commercial banks lend money to general public at base rate. For example, base rate is 9%. And central bank lends money to commercial bank at repurchase order rate, which is also called as repo rate. Say for example, it is currently 6% per annum. And if commercial bank lends money to central bank, then it is called as reverse repo rate. So repo rate is a rate at which central bank RBI lends money to commercial bank for 2 days to 14 days. Currently, repo rate is 6% per annum. For example, if RBI lends 1 crore rupees at 6% per annum, then it will be 1,645 rupees per day interest. Reverse repo rate is a rate at which commercial bank lends money to central bank. Currently, it is 3.35% per annum. Generally, repo rate is higher than reverse repo rate. For example, during weekends, when commercial bank does not require excess money, that time commercial bank lends to central bank. Margin standing facility, it is similar to repo rate. RBI lends money to commercial bank for 1 day. Currently, it is 6.25% per annum. Generally higher than repo rate because commercial banks are in urgent need of money. Next, open market offer by way of purchase and sale of government securities. When RBI feels that there is excess of money or liquidity into the market, they sell the security so that people will buy and all the money supply will flow to government. Next, base rate. When a person goes to commercial bank to borrow money, bank charges base rate. Generally, it is higher than primary lending rate because base rate is charged to the person other than customers, and primary lending rate is charged to customers, the loyal customers. So primary lending rate will be lower than base rate. So these are the indirect measures by which the central bank controls money supply in the economy. Let's discuss direct measures, cash reserve ratio, and statutory liquidity ratio. Cash reserve ratio is a proportion of net deposit and time liability. Net deposit means current account deposit and saving bank account deposits. Time liability means fixed deposit and recurring deposits. So CRR is a proportion of NDTL that commercial bank should maintain with central bank as a security measure. This proportion of money kept with RBI is mandate and it is statutory. Therefore, interest is not payable on CRR. If balance is not maintained, then penalty will be imposed. If there is high cash reserve ratio, then there will be lower liquidity into the market and vice versa. Similarly, if there is high statutory liquidity ratio, there will be lower liquidity into the market and vice versa. What is statutory liquidity ratio? It is a money that commercial bank need to maintain with themselves in form of cash, gold, or any other instrument such as treasury bill, etc. So monetary policy instruments are classified into direct measures and indirect measures. CRR or cash reserve ratio is a proportion of NDTL that a commercial bank should maintain with central bank, and SLR is a proportion of NDTL that commercial bank need to maintain with themselves in the form of liquid assets such as cash, gold, or any other instrument such as treasury bill. Indirect measure includes repo rate, also called as repurchase order rate, the rate at which commercial bank borrow from central bank or central bank lend to commercial bank. Reverse repo rate means a rate at which central bank borrow from commercial bank. Margin standing facility, borrowing for shorter period such as 1 day. Open market order, borrowing money from general public by selling government security. Base rate, rate of interest charged from general public apart from customers, and primary lending rate lower than base rate, it is charged from the customers. Let's check current rates which are available on RBI website. Repo rate 6%, margin standing facility 6.25%, bank rate 6.25%, reverse repo rate 3.35%, CRR is 4%, and SLR is 18%. What is 4% and 18%? It is proportion of total net deposit and time liability. And similarly, SLR, 18%, the commercial bank should keep with themselves. So we have discussed monetary policy instruments with direct measures and indirect measures. Direct measures are those measures by which the central bank controls money supply directly, and indirect measures are those measures by which the central bank indirectly controls the money supply into the market. So there is a question that when there is a poverty in the country, why central bank don't print the currency notes and remove poverty? Because people will start buying things at any price, and then price increases, ultimately there will be inflation. Next, the organizational structure for monetary policy decisions. There are 2 points: monetary policy framework agreement and monetary policy committee. What is monetary policy framework agreement? It is an agreement between monetary policy committee of RBI and government. It is an agreement on maximum tolerable inflation rate to achieve price stability. Monetary Policy Committee consists of 6 members. Here, one member should be the Governor of RBI, who act as a chairperson. One member as a RBI Deputy Governor. Who will be the in charge of monetary policy. Then there will be one official nominated by RBI board and 3 central government nominee who act as a representative of Government of India. Let's check the current Monetary Policy Committee members. These are the Monetary Policy Committee members. You can check on RBI website under Monetary Policy link. Let's discuss some MCQs related to economic system and economic policies. China is an example of which economic system? Socialist, capitalist, or mixed economy? Correct answer is mixed economy. India and China are an example of mixed economic system. There is a presence of private enterprises as well as government units. Next, laissez-faire policy is adopted in which economic system? So laissez-faire means free market economy. It is also called as capitalist economy. So correct answer is B. Economic policy is the catalyst component of economic environment, moral environment, social or legal environment. Correct answer is economic environment. Economic environment consists of economic policy and economic system. Favorable investment on private investment is called effect of fiscal policy, limits on fiscal policy, effect on public credit policy, none of the above. This we will discuss in fiscal policy topic. Which of the following is not a component of monetary policy? Activities of open market, it is a component. Cash reserve ratio, legal liquidity ratio or statutory liquidity ratio is also component. Deficit financing is not a component of monetary policy. It is a part of public financing, that is fiscal policy. So correct answer is D. Which among the following is an essential characteristics of mixed economy? Coexistence of small and large scale industry, coexistence of private and public sector. Correct answer is B. private sector enterprise and public sector enterprise. Public sector means government enterprise. Dash is the economic system whereby the state means government holds broad power to serve public interest. It decides what goods and services are produced and in what quantities. Demand typically exceeds supply. So correct answer is centrally planned economy, which is also called as socialism, socialist economy. Okay, all the other questions will be solved later on after discussing political, social and legal environmental factors.